Well, hello again, Solis Wealth Management family. Greg Solis here for the market update. Let me first of all tell you, we did get to Hawaii. It was awesome. We jumped through a lot of hoops to get there, but man, what a beautiful place. It's so awesome to see my daughter Nicole in her new home. Was able to see her dorm for the first time. It was great to see her and Emily just have a blast together. We actually let Emily stay in her dorm room. We were only there for 4 nights, but boy, they just had such a great time. The only bad news is that I think Emily now wants to go to University of Hawaii. I don't know if I can handle 2 girls there, but it was neat to see Nicole in her element. We were able to see her at work. She's actually working at a little surf shack. We were able to tour her campus. Her campus was beautiful, very quiet because everything's virtual. And it really made me realize how independent and how proactive she has to be to stay busy and to get out into the community. But people love her. She was kind of like the mayor there. I mean, everybody knew her, the locals, the college kids. It was awesome. So we had a great trip, but good to be home for sure. And markets continue to do real well, and we're getting that little pullback that I've been talking about. The equity markets, the NASDAQ especially, off about 3% or so from its high, and so we've seen some volatility as I kind of anticipated. I think this is a good breather that we're taking. As I mentioned before, the market had such a nice run up. A breather is warranted. We need these little consolidation periods. And so we might get a little more of that. Always remember, the price of admission in the equity markets is volatility. That's just kind of part of the deal. And so I think we're going to continue to be volatile, but we are still pretty optimistic for 2021. Again, because of how the monetary and fiscal policy being so accommodating, that $1.9 trillion stimulus package will be coming out. We've got obviously the Fed saying they want to keep rates lower longer, and so they're doing their thing to create a lot of stimulus. That coupled with the pandemic really starting to get under control. Over 1.3 million people are being vaccinated every single day. That's great news. So we're seeing a big drop in the new cases. That with the pent-up demand that's out there, we think is going to be good for the economy, and we think the equity markets will reflect good corporate earnings. So hang on tight, though. I think it'll continue to be volatile. We've seen rates pop up quite a bit. This is a big kind of in the headlines these days, with the 10-year Treasury back in August hit a low of about 1/2%. Historical low. We'd never seen anything like it. It was crazy. And now we're up over 1.5% on the 10-year Treasury. Still historically very, very low, but that's a big move. And the market is telling us something there. What it's telling us is that inflation and a pickup of the economy is out there. And so typically during those times, we'll see rates go up. But there's going to be a real tug of war here because the Fed, of course, is being very accommodating. We're seeing big pension funds and institutional investors coming back into the bond market. Demographics are calling for people to save more. So that's going to be a lot of buying pressure on the bond market to kind of keep rates lower. But yet on the other hand, we have a strong economy and inflation out there. So there's going to be kind of a tug of war here. We're seeing that the 10-year Treasury might hang around 1.25 to 1.75%. Right now we're at about 1.5. So we don't see any big moves from here. We think it'll kind of stabilize in here. But that's important for refinancing. I mentioned last week that if you hadn't refinanced your mortgage, now's probably a good time to do that. Again, if you have questions on that, give us a buzz. But we might see rates continue to move up a little bit. We've seen a lot since August, but we might slow down a little bit on those rates going up at this point. That's our thought at this time, but that may change. So for now, everything looks pretty good. Everything's in good shape. We know it's getting close to tax time. If you have questions on that, please don't hesitate to give us a call. We're here for you. We appreciate you. Hope you're having a great first quarter and look forward to this pandemic getting behind us so we can get out and do some things again. Looking forward to seeing you real soon. Take care and God bless. Bye-bye.